Hi guys, so now we're going to solve an exam style question. We'll see how cash flows is tested in the exam paper as a 20-mark question. I'll declare one thing that there are least chances that a cash flow could be tested as 20-mark question. But however, cash flow is one of those type of questions that can come in a section C type. Alright. So I have a question with me. And here is the balance sheet of Hollywood Company for 2013 and this is 2012. It's a typo, it's a 2012, okay? So balance sheet ends here, then I have the profit and loss statement and I have some notes for Hollywood. Okay, the requirement is prepare statement of cash flows for the year ended 30th September 2013 and an analysis of cash and cash equivalents. So, like everyone's aware, you have to start first with PBT, profit before tax, which is 290 in my case. And I said immediately adjust for two items, that's finance cost and income from investments, because these two you get straight away from PL. Anything else you have to still, look for, dig in, do some workings, but these are pretty straightforward. So with your PBT, adjust for finance cost and income from investments. If you want to remove the impact of finance cost, you'll have to add back. And if you want to remove the impact of investment income, you'll have to less it. So that's investment income for us. So 290, 19 and 5. Alright. The same time when you're doing the finance cost, you must give an impact for the interest paid. So you have to check how much is the interest paid, because when you get the cash from operating activities, you deduct less interest paid. Now that I'm doing finance cost, I'll cater it here itself. And now that I'm doing investment income, I'll get what investment income I've received from cash right now itself. So my next step is going to be workings, where working 1 is dedicated for interest paid. So this is not okay. This is the opening balance in my balance sheet for any interest payable. I'll go to my balance sheet and I'll check in my current liabilities if there is any interest payable. Well, nothing. So no opening, no closing. Let's see if the notes mention anything about it. Yes, there's a note. If you just have a quick browsing, I know first note is related with shares, second is with an investment, then again assets, depreciation, and here I can spot interest payable. So I have a note related with interest payable, which says the accruals balance includes interest payables of 33,000 at 30th September 2012 and 6,000 at 30th September 2013, which means opening payable is 33 and closing is 6,000. Okay, and how much is there in my PL? 19. So 19 is in my PL. What does this mean is I already was supposed to pay regarding interest 33. This was an interest payable. Already I had to pay to the outside parties. Further, this year I incurred 19 more. So total, how much do I have to pay to the outside parties? 52. However, how much actually remains in terms of payment is only 6. So how come a 52 payable has become 6? Because probably you have definitely made some interest payment in the year. So interest paid that way would be so take the interest paid somewhere over here in the bottom. This is also a negative figure, by the way. That's how you get your 6 closing. Okay. Moving further, investment income. Just check if there is anything regarding investment income, any investment receivable in your balance sheet. In my current assets, there is interest receivable. There are investments and there is no investment receivable, however, right? So either this interest receivable is my investment income. I can assume this interest receivable to be my investment income, and that way I have my opening balance 9 and closing 4. In PL, how much investment income you have or interest income receivable you have? You have 5, right? You have recorded 5. So actually you deserved 9 plus 5, 14. However, your closing balance is showing only 4. How come a 14 figure has become 4? Probably because you have received interest or investment. So interest received or investment income received is then that way 10. Okay, so your interest received is going to go in investing activities. Now, moving further, I've already catered the first 2 lines, the PBT, and after this I'll read the notes and cater the adjustments then as and when an adjustment arises. So, on 1st October 2012, Hollywood issued 60,050 cents ordinary shares at a premium of 100%. When they say at a premium of 100%, which means they got 1 cent for each share. The proceeds were used to finance the purchase and cancellation of all of its 10% loan notes and some of its 5% loan notes, both at par. So they issued share, they got money, and whatever money they got, they also spent it on making the payment of the loan notes, right? A bonus issue of 1 for 10 held was made on 1st November 2012. All shares in issue qualified for the bonus. So whatever money is coming in by issuing shares is my financing activity, okay? It's a cash inflow. Then whatever I made payment with, that inflow is my cash outflow. Again in financing, because I'm making a loans payment. Then I make a bonus issue. Think and tell me, for bonus issue, will any cash come in the business? No. So nothing on the face of cash flow regarding any bonus issue. Okay. So when you issue 60,000 at 1 cent each, you'll get $60,000. So issue of shares. Yeah. So issue of shares is going to proceeds from issue of shares, 60,000 shares into $60. So that's going to be 60,000 cents into $1 for each. So 60 cents. But with those, you also did a repayment. So repayment of loan notes is negative 60. If the examiner had not told you also that with the 60 you made a repayment of loan notes, still you would know that there is a repayment of negative 60. And how is that? When you come to your loan notes, that is towards the end, I would be doing this. When you would compare your 40 and 0, you would know that 40 has become 0 because of a payment. So fully cancel 10%. And the next type of loan note, 5%, 349 has become 329. Again a 20 payment. So that way I would still know a 60 payment has been made. However, your examiner has told me by himself that there is a repayment of loan note. Now the current asset investment was a 30-day government bond. So for that, please come to your current assets and observe where there is an investment. I can see a line item called investments, and now I can't treat them as a purchase of investment in investing activities because they say that it is a 30-day government bond, which means it's a highly liquidable asset, and if it's highly liquidable, I'm going to treat it as a cash equivalent. That is towards the end of the perform, I'll take it. Okay. Now next information what they give is on non-current tangible assets include certain properties which were revalued during the year. So think and tell me, if you do revaluation, will it have any cash inflow or outflow? Well, no. It's just on paper. So no impact on the face of balance sheet. Next, non-current tangible assets disposed for the year had a carrying amount of 75,000. Cash received on disposal was 98. Excellent, pick this up. Cash received on disposal. So proceeds from disposal of non-current assets is an investing activity. Proceeds from disposal of property, plant and equipment, that was 98. Also, when you compare this SP and CP, the carrying value, you get a profit, right? So where will you adjust this profit? In the operating. Because if you think this profit before tax has been arrived while taking into consideration any profit or loss on sale of property, plant and equipment. So I want to remove the impact of any profit or loss on sale of property, plant and equipment because they form part of investing. So let me remove the impact. So if there is any profit, less that profit. Profit on disposal, that is 98 less 75, that's a 23. So negative 23 to remove the impact. Further, depreciation charge for the year was 87. I know that 290 was arrived by charging this non-cash expense of 87. So remove the impact, add back. The accruals balance includes interest payables of 33 and 30th September 2006,000. Okay. This already has been created. There is a accruals balance in balance sheet, which means some payables, and this includes interest element also. So I've already catered for interest element. However, there would be something remaining that would be other type of payables. We'll cater them later. Next. Interim dividends paid during the year are 53. So dividend paid, as you all are aware, is a financing activity. So take dividend paid into consideration as a financing activity. I'm done with all the notes. Now I'll go to my balance sheet and compare every line so I don't